Hello there, it's Alison here, doing this quick video to talk about how to backtest Forex trading strategy. I'm going to be as quick as possible with this video, and I'm hoping you get a lot of value from it. I think it is really important to backtest whatever strategy you want to use to trade Forex because the last thing you want to do is to rush into Forex trading, whether Forex trading or crypto trading. I'm going to use both interchangeably right here. But even if you find people on Twitter or on Facebook or YouTube, making a lot of money with a particular strategy, I think it's important you backtest that strategy for yourself, so you can get really confident with that strategy, because there's a lot more involved when you start to trade all by yourself. Okay, you need to know how you're going to handle your emotions and also how your strategy is going to perform under various conditions. And I think also more importantly is how you are going to be able to manage the trades. Okay, so backtesting is just a process of ensuring that you use historical data to ensure that your trading strategy will be valid and that you are able to manage the trade itself. Because basically trading is about 95% planning and 5% execution. I have learned this the hard way. I have jumped into many trades and I find that it's not working, or what I saw working for other people is not working for me, because of a lot of psychological factors which I was not able to control. So this is why I am now doing a lot of backtesting, and I'm sharing with you my experience about backtesting. Okay, so it is important that you acquire the discipline that you will need as a trader, and backtesting will also help you to do that. This video is not good. The time and space will allow me to expatiate as much as possible, but I think it's important that you should be able to tame your emotions of greed and fear, or you will lose money in the markets. Okay, so the obvious benefit is to see if your strategy will earn you pips that will get you paid. But personally, I believe that the biggest benefit is learning how to control your emotions of fear and greed, as this will be your biggest money losers. Okay, backtesting works because market patterns repeat themselves over and over again. So, when you are using historical data to backtest, they work because market patterns repeat themselves over and over again. Okay, so this is a very, very elementary backtesting. I know there are high-tech softwares you can use, but if you're just starting out like many people and you don't want to splash out on money for backtesting software, you can just use TradingView or an MT4 trading platform account. You can get those two for free. You are going to need a demo account with a broker of your choice, a trading journal, and when you have all this, you can let's jump in. I want to say that my company I'm with at the moment, we do a lot of forex education. So if you are interested in learning more or how you can put all this together, I will leave a link below this video to help you to get a forex education, and you can also earn while you learn forex with our swipe trade product as well. Okay, right. So let me jump out of this presentation, and then let's go to a chart which I have put together. Let's see this one. Let's see that one, not that one. This one maybe, no, not that one. What is it? Right. Okay. So what you can see in this chart, you can see I have put like buy points. Now this strategy I'm going to test. So assuming you pick a strategy for yourself first. Okay. Now the strategy I want to test here is a strategy you can use to actually scalp. Okay, now this will work in various time frames. Okay, so just for example, I said I found this strategy. It's a very, very common strategy that everybody knows about, and it all consists of, if you see here, It's just a simple moving average strategy. Okay, so you want to back test to see if this would work for you. Okay, so to enable us to do that, I'm going to probably swipe through all these places, and then we'll go to a place where there is nothing, and then see how we are going to react. Okay, now as you can see, it clearly shows us buy points. I think this one should have been here. Okay, because this is just based on the moving average cross. So I've put here exponential moving average 10 and 15, and then a simple moving average 50. Okay, now with this strategy, as you can see, whenever the 10-day moving average or 10-period moving average crosses over the 20-day moving 15-day moving average, it gives us a buy signal. Another signal will be when both lines now cross the 50-day moving average from below. This will give us a buy signal. And as you can see, if you use a strategy and you keep it all the way up, you will see how many pips you're going to make. Let's see how many pips is in that move. Okay, if we bought here and on the upside, you're talking over 50 pips. All right, and if you come here on the downside, let's see how many pips that would have been. On the downside, that's about 30 pips. Okay, so you can see that the strategy can work. Hindsight is a good thing, but if you wanted to actually see if you can manage the strategy yourself, what I would suggest, scroll all the way back, okay, where you have no data, and then let us pick a point, assuming this was all you could see on the chart. Okay, this is a trading view chart, and maybe you have just finished this move and the market is here, and you decide to buy here. Okay, so we take this arrow here and put this arrow here, right? Okay, we want to go long here. Okay, we want to go long here, and what we are going to do, using the keypad, using the arrows on your computer, you then shift it one frame at a time. Okay, using the arrow on your keypad, on your computer's keypad, you begin to scroll at this one at a time. So assuming you went long here, you probably would have maybe you went long here and you put your stop loss below this swing low here. Let us mark the stop loss here. This is your stop loss. Okay, and let us say you have a profit target which you are going to set of a couple of pips. Let us say you want 20 pips out of this. You can do that. Go by long position. We go in here. Anyway, even if you don't want to take set your profit target, which you should do. But the whole idea is to see how you are going to be able to manage this trade, and to see how you are going, if this strategy is going to work. Okay, so basically what you're going to do, I would then use the arrow, the front arrow key on my keypad to move this one frame at a time, one candle at a time, and these are all 5-minute candles. So as we are seeing, this is what you're likely to see on a proper chart. Okay, so the thing is, if we had set our profit target of 20 pips, let's see, assuming I put this here, and that's about 20, let's see, it's there, and we want 20 pips from there, or so you want 20 pips or 30, let's say 30 pips. Okay, and then our stop loss is somewhere here. Let's see, stop loss is where there, right? Okay, so assuming you want to write that, let's see, take that up. Oh, you can actually get more, but you get the idea. Let me take this off, assuming we just want to write it and find out when to get off. Okay, so you can do that, and you can see now I would remain in this trade. Now before you get in, the thing is that you have to ensure that the green candle actually closes above all these averages. Okay, ensure your green candle has closed above the average. You can then enter a long position, and then you can see all these the candles going back and forth. But I would say, as long as the candles and the 10 period and 15 period moving averages remain above this 50-day moving average, I would continue to be in this trade. Okay, so let's see what happens. Just keep your eyes on, let's make that bigger. So keep your eyes at the edge of the screen here. as we are shifting this every 5 minutes. Okay, so the lines are still above 50-day moving average. Okay, so depending on what your profit target would be, but the advantage of this is that you can actually ride this as much as possible. This is not a set and forget system. I think you have to be by your computer for this to work very well. Otherwise, if you don't have a good stop loss, then you could be well taken out of the trade and you could be in a loss. Okay, so we just keep our eyes on the moving averages and all them. As long as they are both above the 50-day moving average, 50-period moving average, I would remain in this trade. Okay, so we're just back testing this strategy. What is, you see, this is from the 19th of June. Today is about the 24th of June to 2018. This is just only a couple of days back, but you get the idea. Okay, so you keep shifting your arrow key and see what's happening. Now, what's going to happen? Okay, so if I'm here, I probably will begin to think, you know, should I leave this market? Should I jump out of this market? Now, as you can see, even if we use just price action alone, I would have been tempted to probably get out of this market around here, because this is looking like a little resistance zone right here. Okay, so we're talking about your exit strategies right now, and this could have been a point to get out of the market, because as you can see, there's a bit of zone here where price has reversed before. So I will probably close this trade here and collect maybe how many pips from here. Let's see that. That's about, you know, nearly 50 pips, right? 50 pips from here. Now, whether I'm right or wrong, I would have gotten 50 pips. I don't know what's going to happen next. You know, I would have actually jumped out. But let's just see what will happen next again. It will have come down all the way here, okay, and then begin to bounce up again, right? Now, what would you do? Would you want to re-enter this position? Okay, very, very likely you might want to get back in here, because this is like a pullback. Okay, it's a pullback. This is more of a flag, and this is like you know, a trend continuation flag. All right, so I'll probably jump back in here after exiting around here or there, and then go back in at the pullback and see how we can ride this again for some more pips. Right now, again, I'm not panicking because it's just touching this 50-period moving average, and just keep going, and that is how you are going to keep back testing your strategy and see how you are going to respond. Okay, again, I can't see any more resistance zones, so I'll probably stick with it and see how it goes, even though I would have been worried here. But as you can see, it keeps going up, as long as the candles and the smaller moving averages remain above 50-period moving average. I would remain in this trade. Okay, so begin to see what's happening. So the next resistance point, let's see, so it keeps bobbing up and down. Now these are all pullbacks. Okay, when you see trends like this, it's probably a pullback. And if you entered around here, okay, and you've gotten a couple of pips, depends on your objectives. Say I entered around here and you've already done, you know what, 25 pips, entirely up to you. You want to jump out, entirely up to you. Okay, but let's see where this goes. And you see it just keeps going. That was a pullback. Okay, that was a pullback until it closes below the 50-day moving average, like it's just doing now. Okay, then I'll probably leave this trade. Another clue that this is going to get off, you can see how tight these angles have become. Okay, so I'll probably get out of this trade at about this point here, right? Or when this crosses. I've already gotten 26 pips and I will be out of the trade. Okay, so I hope this has helped. I'm going to keep this video not too long. Let me just show you an example of how I'm applying this strategy to tell you what's happening. Like, I've got a trade ongoing right now and I'm already 12.5 pips on this particular trade, which I have taken off the harmonic scanner. Okay, so I hope this helps. If you have any questions, it's not the most perfect strategy in the whole world, but just gives you an idea of how you are going to be able to test your strategy out before you begin to go and risk real money on it. Okay, so after you have spent a long time backtesting, would advise that you then open a live account with a small amount of money. You start with very, very small lot sizes, and you master how to earn, say, 10 pips per day, and then you can scale it up from there. Okay, so just a quick disclaimer, I am not a professional trader. Any ideas expressed here are solely for educational and informational purposes only. Past performance, like I've just showed you, my couple of pips, is not a guarantee you're going to get future results. And also be aware that your losses can exceed your deposit. You should use proper risk management at all times, and never ever invest more than you can afford to lose. Okay, I say love that you lose. Anyway, it's Alison here. Thank you very much for watching this video. Don't forget to like and subscribe to my channel if you like stuff like this. I have a link below to our educational and trading firm and signal service in case you are interested in learning more about Forex and how you can build an income working from home, trading the markets. Okay, it is said that if you want to be a lion, you got to train with lions. Okay, this is why we have a company of professional traders who are doing all the education about how to become successful in the Forex markets. Once again, it's Alison. Thank you very much for watching, and I would like to have your comments, and I will hopefully see you in my next video.